Hey guys, it's Tuesday, October 23rd. I just wanted to do a quick market update. It's 8:39 Pacific Standard Time, so that makes it 11:39 in New York, where the major U.S. indexes are open, and they are down again today quite significantly. The Dow down 1.7%, the S&P down 1.76% as of right now. 1.77, sorry. The Nasdaq down 1.96, the global Dow 1.64. Oil jumped down 2.15 dollars or 3.09%, and the only thing up on this page here is gold, which bumped back up to 1235.90. I should say that treasuries are also up quite markedly on the day. So I made the last video last week and said I anticipated further weakness in these major indexes, that it seemed rather pessimistic to me. So I feel that is held through. I was talking about looking for an exit point on the short inverse of this market. I haven't exited that position yet. Obviously, days like today are good for that position. Let me see if I can just get this full screen here. This is the S&P 500. There's 1 month. It's starting to look rather negative. So a key thing about today is that we actually did break a new proximate low, I will say. This isn't actually showing us what the low was on the 11th of October. I know it got lower than 27.28. Oh, here it is. The low on that day was 27.10 back on October 11th, the previous proximate low. We've cracked right through that. We're currently sitting at 27.07, but the index was actually even lower today, going all the way down to 26.93. It's saying the low is 26.90. Oh no, where are we? Let's see what we can get here. 26.92. Well, somewhere in that range. Now, if any of you watched my previous videos, you'll recall that number from, well, that 26.90 range from way back in May, the end of May. There was some testing of that while the market was at that level of 27.13 that I've been talking about for the last week or so. So my hard to say after a big move like today, but I still would expect the market to test out this floor of 27.13 for a little while longer. That floor lasted a very long time before it's well, I can't really call it a floor right now specifically, although back earlier in October stocks did bounce off of that. So I'm anticipating a short-term, a bit of I don't want to say a recovery, but some short-term support around 26.90, 27.13, and maybe up to 27.30. That kind of range would be my expectation for the next few trading days. Going beyond that, I still just have to say this market index looks very pessimistic right now. I'm rethinking whether I really want to exit my short of this. I mean, it's doing well, and it just does not seem, well, I don't see the bulls yet, and now earnings season's coming out, and that's not good. One other thing I want to mention, I don't have a page of it up here right now, but just a flag for you, especially my Canadian listeners, or any listeners if there are any, is the price of Canadian oil right now. A friend of mine brought my attention to this a week ago, and I've been meaning to make a video on it. But apparently, and no, indeed, I've read this. The spread between Canadian oil and the U.S. Sweet crude is now about $50. A $50 spread in the price, and for Canadian producers, we're not on the good side of that spread. Okay, in case you weren't aware of that. So as far as I know, this is a historic spread between the prices. Basically, that means that Canadian oil has never been as discounted against U.S. oil. And in my mind, this is a direct consequence of the political, the political games, the political system that we've all sort of voted for and developed over these last few decades. This isn't just a Trudeau thing or a John Horgan thing, really. This is something that's been built into our system for these last. I mean, I don't have a specific period, but I want to say a couple decades where, if it takes a major corporation, 20 years to build a $7 billion infrastructure project, get real, guys, right? I mean, we know that's not going to happen. And we can see companies all around this country, the country of Canada, leaving, picking up their investments and walking out because, this will be my short version, but basically because socialism doesn't work for business, and Canada is increasingly becoming a centrally controlled economy with respect to its energy, with respect to its infrastructure, and with respect to a whole bunch of other things. I know that's a simple and silly explanation, but I feel like that's a pretty good summation. We're getting more socialists, so the money is getting out of Canada. I want to make a separate video on this and put my thoughts together and point you to a few things. But, the Trans Mountain guys, was at Kinder Morgan, they're not the only ones getting out of Canada. AltaGas as well. They've been a major Canadian utility and energy company for 20 years almost. And they are a Canadian company, but they've determined in recent years to just invest in U.S. assets. So that's what we're looking at right now. I want to make a separate video, but just flag that for you right now. Have a great day, guys.